The dot-com bubble, whispers before the crash. Imagine a world where everyone believes the future is nothing but endless growth. The internet wasn't just a technology, it was a revolution, a promise, a dream. Investors, entrepreneurs, even everyday people believed they were standing at the dawn of a new golden age. But what if I told you there were whispers, subtle shifts in the market, long before the crash of 2000? Hidden signals that predicted one of history's most spectacular economic collapses. Tonight, we'll uncover those whispers, relive the frenzy, and explore the lessons that still echo in our markets today. The Roaring 90s, a fever pitch. The 1990s were electric. The Cold War had ended, globalization was accelerating, and technology was reshaping daily life. The internet arrived like a tidal wave. Suddenly, communication was instant, information was limitless, and opportunity seemed infinite. Internet speed became the buzzword of the decade. Faster connections meant faster fortunes. Companies rushed to stake their claim. Anything with a .com suffix became a magnet for money. Investors didn't ask about profits, they asked only, "Are you online?" If the answer was yes, the cash flowed in. The media amplified the frenzy. Magazine covers declared the dawn of a new era. Television ads promised a future where every click was prosperity. It was a gold rush, but instead of shovels and pickaxes, the tools were websites and IPOs. The disconnect, reality versus hype. But beneath the glittering surface, reality was far less glamorous. Many companies had no clear business model. They weren't selling products people needed. They weren't generating profits. Yet their valuations soared into the billions. Why? Because the mantra of the era was simple: eyeballs over earnings. The belief was that if you could attract enough visitors, profits would eventually follow. Take Webvan. It promised to revolutionize grocery delivery, building massive infrastructure before proving demand. Or Pets.com, which spent millions on marketing while losing money on every transaction. These companies weren't just burning cash, they were torching it, convinced that the fire would somehow light the way to profitability. Stories of everyday people. Teachers quitting jobs to join startups. Taxi drivers investing savings in internet stocks. Retirees pouring pensions into speculative ventures. The cracks emerge. Whispers of doubt. Yet not everyone was convinced. Seasoned analysts and economists began issuing warnings. They saw companies burning through cash with no path to profitability. They noticed projections that didn't add up. Valuations detached from reality. But their voices were drowned out by the roar of optimism. E-toys failing to meet projections despite massive buzz. Analysts publishing reports warning of unsustainable growth. Traditional industries expressing skepticism. How can a company with no profits be worth billions? The shifting sands, market indicators. Then subtle shifts began to appear. IPOs slowed, investor behavior changed. Stocks that once soared began to wobble. Institutional money, the backbone of the market, started pulling back, almost imperceptibly. These were the whispers before the storm, the silent signals that only the most attentive observers noticed. Amazon struggling with profitability in its early years. Nasdaq volatility in late 1999. Declining enthusiasm for new IPOs. The collapse. And then it happened. The bubble burst. Billions evaporated. Dreams collapsed overnight. The Nasdaq lost nearly 80% of its value. Companies vanished as quickly as they appeared. Office spaces emptied. Fortunes dissolved. The frenzy that had lifted millions into a dream came crashing down, leaving behind a trail of shattered hopes and hard lessons. The legacy. Lessons for today. The dot-com bubble wasn't just a story of greed, it was a lesson, a reminder that hype can blind us, and speculation can seduce even the most rational minds. The parallels to today are striking. Look at crypto booms, meme stocks, or the frenzy around artificial intelligence startups. The patterns repeat: sky-high valuations, promises of endless growth, and the dismissal of fundamentals. Crypto boom and bust cycles, meme stocks like GameStop, AI startups attracting billions with little proven revenue. The enduring lesson is clear: profits matter. Sustainability matters. Hype is powerful, but it cannot replace reality. By listening to the whispers, by spotting the silent signals, we can protect ourselves from the next collapse. History doesn't repeat itself exactly, but it rhymes, and the dot-com bubble is a rhyme we cannot afford to ignore. Conclusion. The dot-com bubble was a spectacular rise and fall, but its lessons endure. The question isn't whether another bubble will form, it's when. The real challenge is whether we'll recognise the whispers before the crash. The future will always tempt us with dreams of endless growth, but wisdom lies in knowing when the dream is too good to be true.